April 20th, 2020, the price of oil fell below zero for the first time in history. And because of it, a 22-year-old was able to make $100 million in a single afternoon. Now, by the following day, the insanity was over. The price of oil was positive again. But that's when the questions started. How is it possible that oil, the lifeblood of our modern world, could fall below zero? When US authorities began to investigate what had happened, they found something very interesting. There was, of course, a torrent of selling in the hours before oil went negative. But much of the selling had not come from a giant oil company or a Wall Street bank. It had come from a tiny company in London, a hedge fund called Vega Capital. And so if we need to understand how Vega Capital caused the price of oil to go negative and how they made hundreds of millions, we need to understand how Vega Capital was formed. So it's time to meet their founder. This is the oil trader known as Cuddles. His real name is Paul Commons, but he earned the nickname Cuddles in the riotous pits of the IPE, the International Petroleum Exchange in London. The trading pits rewarded quick thinking and an iron mind. Cuddles was a natural, and within just a few years he became one of the elite oil and gas traders known as a local. Now, aside from the amazing benefit of being able to wear a red jacket on the trading floor, you also get the privilege of betting your own money in the markets. Cuddles quickly rose to become one of the top 3 in the oil and gas trading pit. Now, on the surface, insider trading is of course banned. And if any of the traders on the floor were caught sharing illegal information by one of the many cameras, the compliance committee would surely look into it. In reality, however, the pits are a gray area. Yes, there are cameras, but there are also many blind spots where traders would frequently go to share information. Yes, there was a compliance committee, but according to Bloomberg, a former executive struggled to remember if they ever even had a meeting. If a local overheard news of a big trade coming up, they would of course front run the trade, which is also illegal, technically. One trick these traders would use is called TAS, or Trade at Settlement. Now stay with me here because this is important. A TAS agreement agrees to buy or sell a future at whatever the price ends up at the closing bell. So if some traders theoretically manage to work together to push down the price of oil at the end of the day, they could scoop up oil future contracts at dirt cheap prices. This practice, of course, was not allowed, but somehow it was so common that it had a nickname on the floor. Quote, grab a grand. According to Bloomberg, in the heyday of the IPE, the best traders would make tens or even hundreds of thousands of pounds in a single day and still have time to hit the pub after. However, it was not to last. With the rise of electronic trading, pit traders quickly became obsolete. Many would leave their career to become bankers or lawyers or traders on their own, and some left to join and start their own trading groups. Cuddles decided to start his own trading group half an hour away from London, and he assembled a ragtag group of veterans and total beginners. There was Chris Rose, a veteran pit trader nicknamed Dog. There was Elliot Pickering, a skinny kid who lived with his mom but drove a Rolls Royce, and Aristos Dimitriou, who was among the group's most profitable earners. Now, Cuddle's group of traders were independent, but they did work together sometimes to buy and sell at coordinated times. And in fact, they would also play golf together, watch sports together, take their families to the same vacation spots. Many even bought properties in the same neighborhood. This is a very close-knit group. And at this point, they've recruited a new member, a young son of a building contractor, whose name ironically was Connor Younger. Connor Younger was 22 years old. Just a few years earlier, he had been posting about rap music and girls on social media, just like the rest of us. But unlike the rest of us, Connor Younger would break the global oil market. Now, we all remember 2020. It started very optimistically. There was healthy economies all over the world. Investors were looking forward to the future. And then, well, you know what happened.
Coronaviruses.
COVID-19.
Oil prices are falling heavily, slipping below $15 a barrel.
Demand for oil has dried up.
The president declares a national emergency.
The virus led to panic, panic led to lockdowns, and lockdowns caused the price of oil to plunge to $20, the lowest it had ever been since 9/11. Every oil futures contract was down, but the WTI contracts, or the West Texas Intermediate contracts, had a particular problem. Anyone who was left holding a WTI contract at the end of a month was obligated to take possession of 1,000 barrels of crude oil. And so usually if you were a trader, you would buy a bunch of WTI contracts and then you would sell them before the expiration date and buy a bunch of new ones. No problem, right? Wrong. Because of the low oil prices, there is a rush of amateur investors piling into the oil market. And now there was billions and billions and billions of dollars of contracts set to turn over. And there's a global pandemic. There aren't enough buyers for these contracts. April 20th was the date when billions of dollars of oil futures were set to turn over. And the world held its breath. The boys at Vega Capital in London woke up before the sunrise so they could watch the carnage unfold. And in fact, they didn't plan to just watch. They had a plan on how to capitalize from the destruction of the oil market. Their strategy was the same as had been used years before in the trading pits of the IPE. They were going to use TAS contracts to make millions. As the market opened on April 20th, the TAS agreements began to go on sale, and Vega Capital bought as many of them as they could. They were taking an enormous risk. They could lose everything. But as the day went on, the price of oil began to fall and fall and fall some more. It opened at $18 a barrel and then hit $0. The Vega Capital boys were up past midnight into the following trading day to take advantage. By 2:08 p.m., the market went insane. With only 22 minutes left in the trading day, a torrent of selling began. Volume spiked across all exchanges, and the price of oil fell below zero for the first time in history, ending at negative $37. The Vega Capital Group had their TAS agreements filled at negative $37 for each barrel of oil. They ended up being paid for the futures they had sold while oil was positive and for all the oil they had bought up while it was negative. This resulted in an incredible $660 million payday for the 9 traders. Cuddles made $30 million. Chris Rose made around $90 million. And Connor Younger, the 22-year-old son of a building contractor, made over $100 million. All in a single afternoon.